What's up, everybody? It's Ricky here, ready to do my Sunday prep. This is July 18th, getting ready for the week ahead. And just wanted to start with something I retweeted over the weekend. It's a guy I follow on Twitter. He's a really great trader. And I think it bears repeating, and then we can actually discuss it a little bit, which was a guy, lone stock trader. He's been around for a long time. He puts out a lot of good stuff, but he said the chart pattern has nothing to do with forecasting where price is going. It's just a way of knowing how to control your risk by knowing where to place your bet and where you're wrong. So, I actually see quite a bit of people talking about how technical analysis is just voodoo, fake science, fake news, whatever you want to call it. It doesn't work. You're just as good if you throw darts at a board. And to them, I think the reason they feel that way is because they're misusing it in the first place. Like the tweet I was just showing was kind of explaining, is it's not a prediction. A stock can do anything. Anything is possible in the market. But what it is doing is giving us a way to define risk, which is super important because it's just a numbers game. And if your risk isn't defined and you don't know where you're wrong, then you're going to find yourself struggling with risk management and, with emotions, because if you don't know where you're wrong, how can you remain unattached to the trade? So I think it's important to understand that technical analysis is really based on just being able to see where you're wrong and how to place a bet and know where you're at in comparison to where you're wrong, so that you can size appropriately and know what kind of risk reward you're working with, so that you're okay with the fact that yes, it could be wrong and it might not work. Because even the best systems out there, they're not 100%. You're lucky if you're 80%, you're lucky if you're 70%. There's people out there with systems that trade 30 to 40% batting, like hitting average, but they're still madly profitable. Why? Because they understand risk management. It all stems from knowing where you're wrong and how to get an entry as close to where you're going to be wrong as possible, but while you're still in the trend. So it's always based on what the price is telling you via the trend. So now that we got that out there, I hope you guys had a great weekend. Before we get into this, always there's the little bit of housekeeping we have to do. Understand that I, nor True Trader or anybody affiliated with it, are licensed broker dealers or financial advisors. Securities investment is a risky business. You must understand the inherent risk involved in it. And you need to understand that anything we say is not a solicitation to buy or sell a stock. It is not investment advice. It's simply me discussing what my opinion is about what I will do in the coming week and how I will manage my risk. And it's just for informational and educational purposes, guys. So now that we got that handled, let's get into the actual set of trades we're going to be looking for. So I always start, guys, with the broader market. If you've been following me for any amount of time, you understand that. I like to look bird's eye view first and get a feel for what we're dealing with. So last week, we finally started to have somewhat of a retracement. I actually find it pretty hard to believe that we've actually found support already. I think there is some more downside. Obviously, what I think might not matter, but I still have to do if-then statements. So, I'm leaning a little bit more downside, a little more bearish this week. If I'm wrong, I'm wrong, and I'm okay with being wrong. I won't remain wrong. So you guys always have to understand that. You've heard me say it before. It's okay to be wrong. It's not okay to stay wrong. But heading into this week, there are some things that make me think that we are going to have some more downside. Obviously, the chart itself should speak volumes. We have not got back to the 20-day yet. And if you look at the last, I don't know, however many pullbacks that were actual pullbacks, the 20-day wasn't it. We frequently get back to the 50-day. And what happens is a lot of people like to start early on, they think we've pulled back to support. We get towards the 20-day of the broader market, and they start looking for stocks that are strong stocks, and they want to own them. They want to join long trends, and they start in at the 20-day. And they don't make a plan that includes, what if we go to the 50-day? What if we lose the 50-day? What if this is a bigger move down? So I'm not trying to be early. So what I actually want to do is kind of be hands off on the long side this week. Doesn't mean I don't have long ideas. It doesn't mean I won't take my shots when they present themselves. It just means that I have that conscious, cautious little voice in my head as I head into the week and look at trades that I may want to take. So the 20 days the first day, or the first area I'm looking for, the 50 days the next. But I actually think that if there's more downside, then there's some possible short setups here where if instead of gapping down Monday morning, if we pop back into some areas of resistance from last week, I may look to put some shorts on. And one of the overarching themes as I went through charts this weekend was it was much easier to find charts that are broken and look like good short setups than it was to find good looking long setups this week, which has not been the case for the last few Sundays. I do these preps, and I think I even said it in one of them. I said, man, I struggle sometimes with finding short ideas and putting them out there because I'm not able to put them on with the kind of conviction I put the longs on, where, I might take a long trade where I day trade it, but I keep something on for a swing. And with the shorts, I'm literally like day trade, that's it, cut it, go home flat, because things just keep going up. But this week, it was so much easier to find the short setups, which is why we go through charts, right? It gives us that bird's eye view. It gives me that ability to have some sort of bias heading in so that I can make the preparations. So obviously after the SPY, I always head over to the Qs, the NASDAQ, and see what they're doing. Now, last week, I'm going to see if I can just pull up let's do a different time frame. This is the 120-minute time frame. So as you can see, guys, as we pulled back, we tried to push higher and we stuffed. And when we rolled over, I actually was kind of, telling our room, I said, let me see if I can just draw this here. Basically, nah, that's not it. Hold on. See if I can get this to straighten out. That's pretty much it right there. Basically, the break of this level was a big short trigger for me. And so I was telling people in our community, like, hey guys, be cautious with like trying to buy flushes. I know stocks look strong. You might want to join them. You see them flushing out. But it's really one of those cases where now when you see things flushing, they might have a lot more downside than you anticipate. So it's better to actually look to short the pops. And I still think we're there, especially considering Friday when we did pop, it was right into the underside of that level, right? So seeing the fact that it stuffed that pop so convincingly, I still think we have more downside on the tech stocks as well. And, when we start looking at some of the tech stocks like Apple and Microsoft and, some of the stronger ones that have a bigger weighting in the index, they are close to highs, right? So if they fall and they start pulling down, what do you think is going to happen to the NASDAQ and the S&P? Those things are going to follow. So that's kind of the thought process behind the Qs. And, I still think pops back into, I don't know, let's say Friday's high, but I don't think we're even going to get there. I would say like 14.8. I might be looking to short stocks that are also popping that have extension, or maybe they're weak stocks popping into resistance. I think that we're going to get a little bit more rollover. And again, the 20 days, the first spot, not the oh, I'm starting in here spot. It's literally the first spot where I might be okay with taking shots on longs. I'm still thinking the 50 days is a much better looking spot. And if you look where the 50 days at, it's actually right where we had this kind of this consolidation and breakout. So a retest of that is healthy. I like that look. I think that's great. I would love to see it. If we just head back up from here, I've been telling people this, the more we do this crap where we just pull back a little bit, don't quite get to the 20-day, and then go and make new highs, the less healthy I think the move becomes. And the more I think when we do have the pullback, it'll be more severe. So I'm hoping that this actually falls back down towards to retest those levels. Let's just call them 14,000. It's a nice round number. You got the 50-day, we got the quarterly, we got a lot of stuff there that gives me hope that when we do pull back to those levels, the longs are going to start to base. The strong stocks will find bases, and we'll start to find levels where we can take our shots on the long side. Again, you don't have to play things from the long side, guys. If it pops, instead, up into the prior resistance, or the prior support, which we've now identified has turned into resistance, there may be things to take short. Okay, so if you're a long only trader, this might be a hands-off week for you. But if you can take trades on either side, I think there might be some good short setups this week, and we'll get into those later. Okay, Bitcoin is always the next thing I look at. Reason being, I just use it as kind of an index for crypto. I don't trade Bitcoin, and I literally have nothing different to say about this than I have in the previous weeks. The longer it goes sideways, the better. the longer it goes sideways, the more I think that move above or below these levels will have some follow through and be like sustainable. And remember, I do like to point out the weekly on this because we're right on the weekly 50, and the weekly 20 is kind of curling down, the weekly 50 is kind of leveling out. At some point, they're going to converge. When they converge, if that's when we decide to start looking to make a move up or down, I think that's when we're going to have a move that could be sustainable. I don't trade Bitcoin, but if we come down to that 20K level, it's going to be hard for me to not probably put some money on the table with this name. Just from a technical standpoint, I think that would be a great level to get involved in the thing. If it breaks above, I don't trade it. It's mostly just for me to know where we're at in the scheme of things, because I may trade the Maras and the Riots and the Cans and the SOSs. So that's why I like to identify these things. So after that, I always get into the sector strength and weakness. Here's the bar chart stuff. Undo this so we can see things that are more than just 10 stocks. And what I do is, and I'm not going to do it here on the screen, but you guys can do it yourself if you've been following the blog where I put out the screenshot of the strong groups and then the weak groups. Do a side-by-side comparison, like what we have this week compared to what we had the last week and the week before, and start to see, are things moving higher, is big money coming in, or are things getting weaker and big money's kind of hands off and they're falling into the bottom groups? Because you don't want to not pay attention to that and think, oh well, this group was in the strong groups a few weeks ago, and here it is setting up and it looks like it's breaking out, and the breakout stuffs and you get hurt because you didn't pay attention and notice that no, it doesn't have that sector strength anymore. You always have to pay attention to the sector rotations, guys. So these are the strong ones. Again, these will be in the written version, so I'm not going to spend too much time on them. But here's the guys in the bottom of the group. Okay, so after that we get into the actual ideas. The first set ideas, they're longs. We're looking for strong stocks, continuation plays, and I know they're kind of blocked by my little picture-in-picture here, but just bear with me, guys. The first one is CRM. I know it's been on the watch before, and I love this setup here. Again, keep in mind, guys, as I discuss long setups, what we just got done talking about with the broader market. So I will take shots at these levels that I'm pointing out here, but I'm not going to get married to things, especially with size. So the first spot I'm looking at is obviously the 50 and the 200 day right down here where you have the quarterly pivot, 233. If you look at the ATR on the name, it's 5 points. We're closed up at 238.40. So that ATR literally puts us right down into the sweet spot. So if this thing flushes Monday, I will be taking a long, especially if it gets there emotionally. If we flush and it's like panic flush down into those levels, I'm going to be taking the long. And here's the way I'm going to play it. I'm going to play it with enough size that if it bounces and I get the quick 2-3 points on it, and don't think you can't. This is CRM. It's a stock that can move. If I get a quick 2 or 3 points, I'm taking the day trade on it, and I may leave a small piece on for the swing. I love this idea for a swing trade. When I had the idea a long time ago, or well, it wasn't a long time ago, a few weeks ago, I don't remember which week it was, but what we were looking for was this candle here, the break. So when it broke above this 238 level, this is the first time we're coming back to retest it. And what I also love is that on the weekly chart, the 50 weekly is right there in that same spot. So I think we're coming in to a retest of a very, very key level. And I am definitely going to make sure I put some on for a swing trade in the longer term account. But just remember, because of what the bird's eye view of the market is, it's going to be like me nibbling versus if, we had already pulled back and found support. And then at that point, I'd be willing to start putting some actual size onto the swing idea. I'll still use some size on the day trade part of it if it flushes like we were just discussing. But the swing trade portion of it is going to be much smaller in case that market does have, a deeper pullback. Because if you look, technically we could come back and just retest this trend line. We might come back all the way to the 220 area. And, for a swing trade, I'm okay if I nibble at 233 to let it keep pulling back against me and nibble a little more at 220. This idea for me personally, I probably wouldn't let it stop me out unless we lose 200. So you have to understand that the swing ideas and the day trade ideas are vastly different in the way I manage the risk and the way that I'm looking at how I would let them play out. So the next idea is the ZM, which is another one that was also on a previous Sunday prep. And it's no different, guys. It's literally, I would like to see this thing flush down to the 50-day. I know it looks kind of close, but we closed at 362. It has a $12 to $13 ATR. So again, that really does kind of put us right down into that 50-day. And you got the monthly and the annual right behind it on the pivots here. So keep in mind, when you take especially on the day trade part of it, when you take a day trade on a name that has a 13-point ATR, size appropriately. Don't size in like this thing is just going to, you can't use 15 to 30 cents of wiggle room on a name that moves multiple points like nothing, right? So you got to size appropriately so that your risk is under control. I also would be willing to swing some of this if it gives me the close I'm looking for, right? The other note I made on this is that we've been hearing these like a resurgence of COVID with the Delta variant kind of headlines coming around. So I'm interested to see if this actually catches a bid just based on these COVID headlines. I know it seems silly, right? Like, yeah, ZM, it's Zoom, right? So it's not necessarily going to be more popular or anything because of COVID, but it is something that, the way human psychology works, where money may come flying right back into it just because it was a COVID name. So that's all for the strong stocks looking for continuation. Usually it was kind of tough to actually find names where I was like willing to put risk on the table in this market. Therefore, that's why it's kind of short and sweet on these ones. The next setup I always look for is things that are oversold, and I'm looking for a reversion trade on them. So let me go and pull those up. Oversold reversions. First one I've got on the list is Space. And Space, trust me, everybody that knows me knows that I think this company right now is just a giant piece of shit. They do a giant $500 million ATM after, the weekend news of the space launch, whatever. It was expected, but it's still kind of scammy, still kind of dirty. And we've gotten, a substantial sell-off. Now, it's still a cult stock. It's still something that you're going to hear about on the Wall Street Bets Reddit boards. You're still going to find buyers. So if this thing really flushes out, I've got 25 on my charts marked. There's the annual pivot down there. You see an older trend line that kind of broke. And actually, I had a nice discussion with somebody over the weekend about, they said, well, when trend lines like that break, does that kind of take them off your radar? No, trend lines really for me are just kind of a visual guide. And, for me, I'm much more focused on what the trend says. You can break a trend line and still be in an uptrend, right? It really comes down to, are we still making higher highs and higher lows? And you can break a trend line and still be making higher lows, right? The trend line is not the end all be all. So I am still kind of looking at that possibility of that trend line holding. You guys can see on the weekly how that lined up. It's also, there's obvious key levels from 25 if you go back, 22 to 23 to 25. So if we flush down there, especially like I said about like CRM, if it's emotional, if we get that quick, like say we gap down to 28 and we get a quick 3-point flush off the open, I'm going to be loading on that 25 level for the quick reversion due to the emotional move. The next one on the list is NVDA, which is a stock I really love, and it's not quite your typical name that you're going to see on the oversold reversion setups because we're still way up near highs. Usually the oversold reversions are way down, below recent levels. But this is kind of selling off at a pretty fast pace here. Again, it's one of those ones that has a higher ATR. I have it covered. 23 points is the ATR, guys. So we closed at 726. Where's 23 points put us? Puts us right into that 50-day, the 700 psychological key level. I don't see how I don't take a shot there. I think, if we flush down to 700, I think it's easy to get a 5 to 10 point bounce on the name. Now, I don't think this is not the type where I would marry it and be trying to hold it. If it pops and I get the quick day trade on it and it starts stuffing the pop, I might even look to flip short on it depending on what the market's doing. And the last thing, I don't know why I didn't put it in the list, but I'll just put it in here right now, is WYNN. Oh, I see why, because it's already up there. So WYNN is the other name, guys, that's kind of like oversold reversion. I believe it was in my prep either last week or the week before. And what's funny is, if you remember, guys, I literally said it may bounce here at the 200-day, and if so, I'm going to miss the trade. That happens. Sometimes you miss trades. It looked like it was going to bounce there, and I looked like I was going to just not get a trade. Patience is pain, right? We're coming into those levels. 100, the psychological key level, to 104. Somewhere in there is where I'm looking to get involved in this name. Now, we're already at 104.70. We're already into those trend lines. I'd like to see the flush out to 100. We got the annual pivot there. There's a few other things that I like about it. But just as I said about the COVID headlines possibly having an effect on ZM for the upside, the COVID headlines, we have to be objective here, may actually play a part in causing WYNN to find a little weakness, right? The travel names have looked like dirt. WYNN, this chart's looking a little bit heavy here. So we got to wait and see what's going to happen with what people make of these COVID headlines. So that's it for the long setups. Let's get into the short setups. The first ones we look at are the weak looking stocks, and I'm looking for continuation on them. Now this might actually be a little funny here. Let's try this, okay? FSLY is the first name. What am I looking for? Pretty simple. I want to see a hard pop into the 20-day for a fade. You see the 20 days at 56, the monthly pivots at 54.40. A hard pop up there, I think, is a good fade. Roblox. Now this one's kind of sad because I bought this in my kids' college accounts. So I'm looking to short it, tell the kids they're not going to get to go to college. I apologize. What am I looking for? A hard pop into the 20-day, guys. You got 85.20 and 85.90 is where the quarterly pivot is up there, and you also have the 50-day. So, and it's also a breakdown level, right? We tried to push up and we rolled over. So anywhere up into these levels, I think it's going to find some resistance, okay? So the next one, JMIA. What am I looking for, guys? A hard pop up into the 20-day. So a hard pop into the 20-day puts us in the 27 area. You got the monthly pivot at 26.60s, and up there you have the 50-day at 27.88. So like plenty of resistance on the name. Chart looks broke. We're under the 200-day. We're under all the meaningful moving averages. Last one on this setup, guys, LAZR, LAZR. What am I looking for? A hard pop into the 20-day. Are we seeing a theme here? Just maybe? Hard pops into the 20-day can oftentimes give you great short setups, especially if they're an emotional pop off the open. You get some sort of opening imbalance and something catches a bid, and we're in a market where I'm already thinking this might have further to the downside. These are the setups that look juicy to me, okay? So that's it for the weak stocks looking for continuation. Now, let's get into the overbought reversion setups. There's only one, and it's my main focus on Monday, and it's going to be my main focus to the point where I might not pay attention to anything else depending on how we open up tomorrow. And it's MRNA. I don't know if that comes as a surprise to anyone. But this is about, it's getting to the point where it's about as A+ as it gets. This has me fully focused. Now, I tried the short on Friday. I think I shorted after it cracked in the morning. I mean, let's pull up an intraday chart and we can just kind of go over it. Shorted after it cracked in the morning. This popped back up into 278 was what I shorted, and we were up 4 or 5 points. I didn't take anything off. I am not playing this, guys, for 4, 5, 6 points. This setup, when it plays out and when it works, is a 15 to 20 to maybe 25 point trade, depending on where we open up Monday. So you're not going to see me taking profits at 3, 4, 5 points. This is bigger picture, guys. And when it's A+, you gotta have some conviction in your setups. And I have full conviction in this that we're going to get a big trade. Just depends on what we do Monday morning, right? So I'm praying for the gap up. I want to see 300 plus come Monday morning. Now, I do want to make sure everybody understands one thing about this. So we gap up Monday morning 300 plus. You can't just throw all risk management out the window. Your risk management is still what allows you to put this trade on and know that even if it doesn't work, you're going to be okay. I see too many people that get so biased and so stubborn, and so I'm like, I have to be there for this trade. I have to nail this trade, and the trade doesn't work, and they get hurt really bad. What happens? The next day turns out to be the day, right? And they're so hurt from the previous day, they're just mentally blown out and they miss it. Why do I bring this up? Well, I'll show you. This is MRNA back in late November last year. Okay, so this could represent Friday, right? Last Friday. Tried the short, didn't work. This could represent Monday. Look at that. Got the gap up, and if you came to the market stubborn and like, I'm going to short the hell out of this and I'm going to make, my whole year's bank right here today, this is the setup, you would have got burned. Look at the next day. This could be Tuesday. Do you see why it's important for us to remain patient and focused and not get over biased so much so that if Monday's not the day, that we're not effed up in the head on Tuesday so we missed this setup? And this is what I'm talking about. Still got the gap up, went from 178 down to 100. Well, the low of the day was 130. Do you see why I'm not looking to take 2, 3, 4, 5 points on this? This is a bigger picture setup. Have that bigger picture mindset, size appropriately, take the paper cuts when you're wrong, don't fight it, don't ignore what price is telling you, and let's see if Monday's the day. If it's not, it's okay. I'll be ready for Tuesday to get this trade. So let me get out of this mode here. So you see, this could be that Friday. We could gap Monday 300 plus, and it still might not be the day. But the higher it goes, the more A plus this becomes. So this is my main focus, guys. So now we do have earnings names. I'm only going to focus on a few of them because, there's a ton of names to report this week. IBM's the first one I have written down. Let me go to the notes on it. Basically, I would look to short any pop back up into this 147 area depending on where it gaps up, right? If they gap up. And the thing about the earnings names, guys, I think this is the first time I've done the Sunday prep with the video version where we have earnings names, right? So the way earnings work for me personally is I make plans for all kinds of different scenarios because we don't know if they're going to miss. We don't know if they're going to beat. We don't know if they're going to beat and still gap down. We don't know how the market will react. So you have to make a bunch of if-then statements. And sometimes, I feel like people look at the Sunday prep and go, man, Ricky was so far off on those levels. I don't know where things are going to open, and I don't pretend to. But I am prepared. So if we were to open somewhere around here they report Monday after the close. So the play will actually be, sometimes I trade earnings after the numbers come out, in the after hours. IBM you can because it'll have liquidity. That's what it really boils down to. Can't trade after hours on something with no liquidity. All the names I put on here are going to have liquidity in the after hours. That's why I feel okay putting them out there. So it depends on where we close Monday after the bell and where this gaps, if it gaps up or down. But basically what I would look for is fades if it pushes hard into this 148 area. You've seen it's been resistance. It's this very long-term downtrend line. Yes, we breached it earlier, but I think a big pop into it is going to give you a nice fade initially. It doesn't mean something that I'm going to hold for a while. I have in my notes, and that's why I have this alert up here, anything over 153, and I think that IBM becomes something that goes into my long-term portfolio on dips. I think it's, it has that look where this could be making a bigger picture move if we break back over those levels. And you see, we're right off the 20 weekly. So this is a key launch support. I actually had this was on Sunday Prep last week, I believe, right? For buying it off of these levels. And it was a nice trade. It worked out well. But I'm prepared for all these different scenarios. On the downside, if they gap it down, I'm looking for this 133.70 to 132.30. You have the quarterly and the monthly. You have the 200-day down there. I don't know if it's going to push down that far. You kind of have to look, when it comes to earnings, you have to look at previous reports and how they affected the stock, what kind of moves they make. You can also look at how options are pricing to see what kind of expected move is priced in. So the next name is Netflix. Now Netflix has really, really been just consolidating on the bigger time frame picture here, like very nicely. I turned down the brightness or the opacity on this rectangle that's drawn here, but there is a big old rectangle we're just channeling, and it is starting to tighten up a bit, right? So it's kind of looking like a bit of a pennant. If it breaks up, if they gap up and start breaking out on levels, I'm probably more likely to join trend on the long side, because when these big names start to break out of long time consolidations, the moves can be massive. And I'm not trying to pick up pennies in front of a steamroller. Yeah, you might catch a few points on the fade on the extensions, but I think you're fighting the big money if you're trying to fade it and everybody's buying this, because it looks like they've finally broken out of this long consolidation. If they gap it down, I think I'm probably likely to be a buyer down at the 484 I've written down. It's at the base of that trend line, and you have the quarterly pivot down there. Remember, this thing can move pretty big off the numbers, right? The next one on the list is Harley Davidson. Again, this was a short idea from a few weeks back. It's played out really nice. I honestly think that it has more downside, and if they gap it up off the numbers, I'm willing to fade it into that 46.50 to 47 area, maybe even add all the way up into the annual pivot up there at 47.50, because I do think this thing is starting to roll over. And if you look at the weekly chart, this is where that idea had come from a long time ago. I'm actually the pivots look silly when you have so much time. You see what we've done here? So long-term downtrend, the Fibonacci retrace was right up into the same levels as we're into now, right? So it's just kind of a market cycle. Down, push up, down, retrace about the same amount, run into this resistance, and start to roll over. Now, could it break out of this big old long-term downtrend and head higher? Damn straight it can. It's no different than the IBM thing, right? No different. But until it does, until we push over those levels, I'll still remain on the short side when we pop into resistance. So that's kind of what it's based on, like an emotional spike up into resistance on a name that's starting to look a bit broken. After that is CROX. Here's a name that has been very strong. This whole chart makes me think of, dips are going to get bought by people that feel silly for missing out on this giant move. So I feel like flushes, the first area of interest is going to be that 102 area. You got the annual, the quarterly, everything down there in that 102 to 104 area. That's where I would look to buy a flush, the first level. If it were gapping down way further than that, then those levels are kind of like not going to be in play. Then the next area is going to be this 84 to 78 area, or 79, sorry. You have the 200-day, you got the annual, you have some monthlies. A lot of consolidation area too. This is where that breakout level was. So really kind of 85-ish is where the first levels I would start in on this, on the long, if it flushes down. If it gaps up, maybe there's a play. I'm not a big fan. Like, basically, if you wake up in the morning and you go to the mirror in the bathroom and go, I'm a trader. Oh yeah, what do you do? What is your setup? I short earnings winners that are breaking out in all-time highs. Say that enough times and you'll realize how silly it sounds. It's one of those things where it's like, okay, it might work every once in a while, but I think if that's your long-term strategy, it's probably not super sustainable. Second to last name on the list is Snap for earnings. It's later in the week. I think it's Thursday after the bell. I am currently in a swing long, but it's kind of just coiling up. I would love to add to the swing long down along this 200-day. Flushes down into those levels, I'm a buyer. 55 is what I have written down as the first level, and then the 200-day. Under the swing is going to be invalidated for me under this low here, which is kind of, we'll just call it 47.50. And I'm just throwing that out there for anybody watching this who's in our room who may also be in the swing and wondering where the hell's Ricky going to stop. Yeah, under that low is where I would be wrong in the thesis. Twitter, the last name on the list, and then I'm going to shut up. So basically, hard flush to the 50-day and the monthly is the first spot I'd look for. You got this uptrending line here that we would kind of be almost retesting if we get there. I don't know why it isn't drawn all the way out, but it is in the Sunday prep. So there you go. That's the levels I'm looking to buy against. Maybe the 200-day. Let's see, and then 79 to 80 up in these levels. If it were to spike emotionally, that's where I would probably look for the fade. And I know there's a bunch of other names that are reporting this week, especially like the airlines. Again, the airlines are going to possibly be maybe showing some weakness with these COVID resurgent headlines. And for that reason, I kept them off the earnings list. I will be watching them. I'll probably be more reactive to them, more kind of like seeing what the tape looks like. looking for trends to develop, and I may still play them, but I just decided not to throw them in the Sunday prep. One thing I want to talk about is Goose, who does the Wednesday market, like a midweek recap and what he's looking at midweek, because this is just Sunday, right? We're just kind of like getting into the beginning of the week. A lot of these names play out early, right? Monday, Tuesday, then before you know it, like a lot of the ideas either played out or invalidated, and you're left with, wait, what do I do now? Well, Goose puts out a Wednesday midweek watch, and I'm telling you, he's been so spot on. Like, you would be doing such a disservice to yourself to not check him out. Go back and watch last week's and look at the ideas and look at how they played out. I know CRWD was one of them and PTON was another, and you couldn't have been more spot on. And the cool thing about it is he makes the disclaimer right off the bat, kind of like I do too, right? Is these are if-then statements. So some things don't play out. We're not trying to bat 10 out of 10. We're trying to give you guys actionable ideas. And like I said, if you're not paying attention to a guy that has that much experience in the market, who puts this out for free, you're silly. You're playing yourself for a fool. DJ Khaled voice. And, the other thing I wanted to mention before I kind of just end this was I do these Sunday, right? And a lot of people we've been talking with, what do you do for your Sunday prep? And they say, I wait for Ricky's to come out, or I wait for so-and-so else's communities to come out. And basically you're looking for people to spoon feed you ideas. Well, here's a little hint or a pro tip. I did this Sunday prep with a fellow trader who's been kind of struggling, and it was an eye-opener for him because he saw how many ideas I go through and set alerts on different levels. And at the end, this is like basically boiled down or distilled down to like a handful of ideas. But that doesn't mean I haven't looked at hundreds of charts. That doesn't mean I haven't set hundreds of alerts. There's so many things you're not getting if you're just watching the Sunday prep. And if you're not doing your own Sunday prep, you're just basically relying on someone else's ideas, which really makes it hard to have the conviction that I may have in my own ideas. So it's important for you guys to take these tools, take the way we've tried to show you how to do a Sunday prep, and try to do your own. Come up with your own ideas. You would be amazed at how much more conviction and confidence you have as a trader when you start playing your own ideas. Even when they don't work, when they don't work because it was your idea and you put the legwork in developing it. And it's okay to be wrong. As long as your risk management's in check, you don't have to be right very often. You can be right less than half the time. And if you know how to enter where your risk reward is skewed, and you know how to manage your risk by setting your stops correctly, you're going to excel. You're going to find that you progress. And that's the name of the game. The other thing I wanted to say is this is just a Sunday prep. It's just one day of the week. I also look at charts every night, every day of the week to still keep my finger on that pulse. So make sure you guys understand that. If you have questions, throw them in the DM. Make comments on the YouTube video. Please let me know what I can do better or what you would like to see in the future episodes of this. And like and subscribe hopefully too. I think the YouTube algorithm picks up on those things, so we'd love it if they could get more traction. And hopefully you guys are ready to crush shit come Monday morning. See you then. Peace.